I lost $2,500 last night trading gold. And the thing that pisses me off the most is that I had a strong feeling we're going to come down a little bit further before pushing higher. But it started looking good and I got into the trade way too early. Having still in the back of my mind where the next area of support would be, the next range of support would be. So I would, lower my position. I would move my stop loss back to those new levels, and I would add to the trade because that's how I like to trade, right? I start off with a small position. I could have taken profit at $477, missed my TP by like 50 cents on gold, by like 5 points, and missed my TP, completely reversed. So I started holding it through drawdown. I got out of some few trades to de-risk. As it started going against me and going more into drawdown, then that's when I started adding more to the position. Because we're bullish on gold. So I was expecting that $4,000 break on gold, which it retested it 3 different times. And I was expecting it on the second time at that all-time high. I was expecting it to break. It didn't break. It ended up doing a huge sell-off. Came back down to a recent support area. Went back up again to previous highs, and this is when I started taking profits. I started taking some profits up there, and we can see my trades here. These are all my trades on the 5-minute. So we can see like this was my first entries here, and I was expecting the break here. I was like, okay, let me get in some trades here. Let me start cashing out some profits because I started getting into profits. I was like, we're coming up into a key area, which is the $4,000 area. And I'm like, okay, we might see a big rejection here. Market started rejecting a little bit, and I thought it was going to go up higher a little bit. So I started buying a little bit more here. Started buying more here, and this was my initial stop loss. So like right around here, I started de-risking and just getting out of a few trades while still holding my major position. As it started coming down into this area right here, that's when I started adding more. As you can see, I have buy arrows here. So I started adding more. I started adding more positions here, and I started getting out up here, just trying to scalp it now, just trying to recoup some of my losses, because at this point I was already down like $400. So I was trying to recoup some of my losses by just scalping the bottoms here. We were having some strong rejections. So I started scalping the bottom, got out of some entries here, started recuperating some of my losses. Market dumped again, and I bought another position down here, and then that's when market overall started, going higher. Now I'm like, okay, now we are starting to have some big breaks here, some big green candles. Let's see if now on the second attempt to break this previous high, let's see if we can finally do it. And I had overall my target was up above previous highs. I just wanted a quick pump, a quick break above the highs, so that way I can just get in, get out, because if they're going to go ahead and sweep a lot of liquidity, get a lot of that liquidity, they're going to pump it up, and then it'll have a sharp rejection in most cases. So if it was going to break, I was expecting a big break back to the upside for a few more dollars, and then a big rejection. But what ended up happening was it just held that $4,000 level for a very long time. It started coming back down, came back to like this area here where it started the initial pump back up. So this is where I had an idea of, there's strong buyers in this area, which I started buying these lows here. After I saw it consolidate a little bit, I was like, okay, let me wait for the bottom of the range here, buy some at the very bottom. Market came down again, bought some more at the bottom, and then I started getting out at the top of the ranges again, because then I started, trying to scalp this, trying to recuperate some of my loss that I already had. Market overall ended up continuing to dump, and just dumped and dumped and dumped all like 11, 12 p.m. at night. Oh, let me get some water. Around 11, 12 p.m. at night, market continued to dump. And this is when I started cutting my losses. I was like, okay, I'm just going to cut losses. I'm going to cut. Well, actually, no, I started buying more here because it was the beginning of London session. I knew that we had some liquidity levels here and some liquidity levels here. And if we look on a higher time frame, let's go to the 30-minute. Let me remove this. All right, so I removed my chart executions so you can kind of see it a lot cleaner. But if we go on a 30-minute time frame, my whole general idea was, these moving averages, I use them a lot, especially when we're in a trending market, because usually they come into these moving averages and they pop back up, right? They come into the moving averages. This stepped out of the moving average to this previous low here, which is, very, very acceptable for it to come and retest these lows and create that base before pushing higher. But you see how every time it pops down into the moving averages, it goes higher, pops in here to the moving average, it goes higher. So it's been hitting the moving averages and continuing higher. So what we want to do is we want to wait for it to hit the moving average, get as close to the moving average as possible, and then start buying based off of, if it's a good risk to reward, what our risk is going to be, and then where the next level of support, that next level of zone support is. For me on the 4-hour, my support zone was down here because we had a lot of, trading activity. It did consolidate. On the 1 hour, this 1 hour, it consolidated here very well. It broke out, respected that, and it continued higher, came down. This is where I eventually got out, but I had such a feeling that I was like, if this is gonna pop down, it's gonna pop down back into this area here where there was a lot of transactions being placed. Like this is where there's a lot of consolidation. So if it comes down, it's gonna pop into here and then move up, right? But I was in too early. I guess I was just in too early, and I did over leverage. So I ultimately So I ultimately got out. So these were all kind of like my entries here. Like this was my first entry here. Took some profits there. Held some through drawdown. Ended up closing out my drawdown. Started buying more down here at this at this support zone. Started buying more down here. Started taking profit at the top. Trying to recuperate my loss. Market dumped. I started buying few more here, holding these shares or these contracts. Started buying more here. Started getting out of some of my positions here to start de-risking a little bit in case it started dumping because of this big red candle. Market overall broke this level, and honestly that's where I probably should just got out, but it was starting at the beginning of London session, and I knew that there had to be some liquidity to be taken here at these lows. I just had a feeling that they're gonna break these lows, entice a lot of sellers because we're in an overall bull market. So I was expecting for market to continue to do a false breakout back into these areas, grasp some liquidity, and then have that final push up. I started buying some more down here because overall it was still a great risk reward. If I would have stayed in this position back to these highs, it would have been like a 1-9, and that would have put me back above everything. But at this point, I was already so mentally exhausted because I was watching the charts for a few hours. So I was already kind of just I was in a very emotional state. I was on the verge of going on till. I was losing. I was in drawdown like $1,300 by once it started breaking this right here, and I was in a lot of positions. I was still in about $1,300 drawdown. I was already down like $300. So total, I was down $1,700 in drawdown. Market came all the way back down, and ultimately I ended up losing $2,500 on this trade here. Let's see. Yeah, I ended up losing $2,500 on this trade, and really it was just kind of I risked a little bit too much for me to hold it to another solid trading range, right? Another solid support zone. So I was kind of over leveraging a lot. If this would have come through and I would have held it and I would just be like, okay, let's try it again, and hold it back to the highs, then that right there would have put me back at like break even or up a few $100. But at that point, I was already down 2,500 in closed P&L. So I locked myself out of the account, and I was like, you know what? I need it. I'm going on tilt right now. Like I'm gonna blow this freaking funded account, and I really don't want to. So right now we're at 1361. We took some good trades. I overall still feel like they were good trades. I just over leveraged a little bit too much, trying to make, a significant amount of profit and take another payout, right? Because at the end of the day, like I'm willing to risk it, right? I'm willing to risk it. I'm familiar with the trade and the market structure, so I'm willing to take some of these higher risk trades. Unfortunately, this one just didn't pay out. We've been on a major winning streak, so for this to take us down $2,500 is okay. Like I already felt like there was a loss overdue, but I just had very high conviction on this trade. I was very confident, considering that we're in overall, weekly, daily bullish uptrend, and we tested these highs multiple times. So I was already expecting a break, and market did end up breaking overall, and now we're trading higher than 4,000. So right now where market's sitting at is, again, see how it popped into this moving average, and then it popped into the moving average and it just popped back up. So even if like you were to catch a buy here, right, and you were to just do a quick buy here, try to catch it to its open, you're going to have a really tight stop like right around here. Even this small trade right here would have given you a 1 to 2. So market started moving sideways here. Try to buy the bottom of the sideways here, because on the 30-minute, we already know that it's hitting a moving average here, and it's been just staying above these moving averages, especially the smaller one. So this would have been a good trade here to take as a quick scalp, quick 1 to 1, 1 to 2. As soon as you see some profits, boom, get out. But right now we're gonna wait. Gold is at an all-time high, so we're just gonna wait a little bit and see what happens. But yeah, that was my overall trade. $2,500. We're at a $1,300 balance right now, so we still have room to grow this. I've grown $1,500 accounts, $1,000 accounts, back up to $3,000-$4,000. I just have to start playing a little bit smaller now, start kind of capitalizing on small little scalp moves and just scalp my way back up into a good number. And I just need 4 more winning days for another payout. So if I get this account to $4,000, $5,000, then I could request another $2,000 payout, and that's better than most, because I'm already at, that would put me at $8,000 in payouts in the last 30 days. So we'll just be a little bit patient. You see look, now gold is having those big pushes. See, if you would have had bought right here, which honestly I would have bought it right now. I just wasn't paying attention. But yeah, this was a really good trade. Have stops really low, and this thing's now starting to pump up. You had a good 1 to 3, 1 to 4, even if you had a stop like below here, or if you go on the 5-minute. Yeah, there really isn't a good area of stop. It would probably be like down here, but that's still perfect. A good 1 to 2. So Yeah, if you wait for trades to come down to your moving averages, that's usually how I like to trade. As long as the market is in a bullish or bearish downtrend and it looks like it's trending very well on the 15-minute, 30-minute, 1 hour, 4 hour, and so on, then once it moves into a 30-minute moving average or a 1 hour moving average or a 4 hour moving average, then that's when you want to start looking for the consolidation and start looking for distributions going to the upside, because most of the time it'll continue with the trend if we're overall trending, right? So if we're going to consider this a bull trend, then we're going to wait for it to pull back into the average price range that it's been in the last 9 and 21 days, and then continue that bullish movement. Waiting for it to tap those moving averages will give you a really good risk reward as well too.